Hi everyone, this is Dale Fowler. What I'd like to do is quickly overview for you a little tool that I created that might help you get kind of a bird's eye view of the entire accounting process. So I created a spreadsheet here. I call it a visual accounting system, and this introduction kind of gives you the big idea or the steps we're trying to walk through. But let me just visually show you here. When you click on Visual Accounting System, you'll see this little spreadsheet. And what you can see here is some business transactions. And what you do with those business transactions is you record them in a journal in debit and credit fashion. And the whole debit and credit concept is just going to elude you for a while. And so the way this works is you plug in here the debits and credits. You put in the names of the account you're going to debit, the name of the account you're going to credit, and you put the debit amount first and you put the credit amount second for each transaction. And if you don't understand what to do, you notice if you hover over a cell, it tells you exactly what to put in here. So these business transactions are recorded up here, and then they are sorted, classified. You see, a journal is like a captain's log or a diary. It's in chronological order that the events happened. But then these transactions are sorted or classified or categorized over here in what's called the ledger. So there is an account cash and receivables, and in this case it's a cottage. These are the assets. Then you have some liabilities, and then there are equity, and falling under equity are revenue and expenses. And so you are categorizing the debits and credits into their proper account. And then to make sure that all the debits in the accounts is equal to all the credits in the account, what you would do is do what's called a trial balance. Put the balances on trial to make sure that debits equal credits. And from there, you might have to make some adjustments at the end of a period. That will come later. And then from there, you produce the basic financial statements. Here you see an income statement, statement of retained earnings, and the balance sheet. So if you notice, when you start recording these transactions, start right here with January 3rd, deposited $1,000 in a checking account to start a new business. So you would come over here and you would put in cash here, because you notice that the little marker says to put cash here. And then the amount is $1,000. So we'll key that in, but watch what happens over here. Watch what's going to happen throughout the statement. When you put in the $1,000, bam, look at that. The debit was made automatically to the cash account, and then it was automatically put in to its place in the trial balance, and in turn it was put into its place in the balance sheet. Then the other half of the transaction is space over to the right two places, key in the name capital stock. And then come over here and put in the $1,000 credit. Bam, look at that. Capital stock is updated, posted to. The process of copying this information from the journal to the ledger is called posting. The postman delivers mail to your house. Posting, we deliver the account balance, the account amount from the journal to the ledger accounts. Houses have addresses. Accounts have addresses. This is account 11, 12, 13. You'll see a lot larger numbers in corporations. And notice over here, the trial balance is still in balance. Notice that. And then we can see that the equity account was updated. So Once you have recorded all the transactions in the journal, debit and credit fashion, all the ledger accounts will be updated, the trial balance will be updated, and if you've done it right, you will have completed financial statements. You will notice that the balance sheet, the assets and the liabilities and equity, assets will equal the total of the liabilities and equity. And once you have everything done right, you'll see pop up in red here on the financials, it'll say correct once everything's done. So you know you did it right. So I call that the visual accounting tool. It helps you see the entire accounting system on one screen. We journalize in the journal, the book of original entry. We journalize business transactions. We journalize them in debit and credit fashion. And then those are, in older systems, manually posted to the ledger accounts and then tested to make sure everything's in balance by copying the balance of this account over, copying the balance of this account over, copying the balance of this account over, totaling the balances to make sure the total of the debits equals the total of the credits, and then we may have to make some adjustments, and we'll discuss adjustments later. Due to the passage of time, some account balances will change, and then once we've made our adjustments to the trial balance, we will produce the financial statements. And you'll have either net income or net loss here. That in turn updates the statement of retained earnings. You'll notice net income is here, so what you're really doing here is you're adding the revenue and subtracting the expenses from this. Any dividends or withdrawals that are made are subtracted, and the retained earnings is adjusted. Retained earnings simply means earnings that are retained. See, if you have a corporation, you give the owners dividends. So the portion that you give away is called dividends, and the portion you keep is called retained earnings. Earnings are either kept or given away. In a sole proprietorship, they're withdrawn. And then you will have the financial statements. Total of the assets will equal the total of the liabilities and equity. So that's the visual accounting tool, the VAT, an entire accounting system on one screen to give you the bird's eye view, to give you the big idea. You're going to be walking through this process during this course. It starts out with you keeping this basic equation true, and then we expand it so that we understand there are various types of assets, various types of liabilities, various types of equity, and we can continue to expand the system to suit our needs. Smallest little business to the largest business can use accounting because we can expand it to meet the needs of any accounting needs of any corporation or any entity. So that's a quick overview. So if you walk through this, it'll help you, I think, understand the big idea, and then as you walk through the course, we're taking it one step at a time to build our understanding of how the total process works.